All right, let's take a look at this dot 1 hour alert that we got a couple days ago. It hit TP1, but it really missed the bulk of the trade if you had traded it precisely as per the tight stop loss close below value here. It came in at 8.255, stop loss close below value at 8.10, and I'll flip to the chart. This was the trade, so yeah, you got TP1, but you missed the whole move if you had traded strictly by the data on the alert. So this is why we say, look, early beta. Also, this is a tool to help you bring your attention to a potential trade and assess the setup. So part of assessing the setup is looking at the stop loss and going, is this reasonable or is this tight? So when you get an alert, especially after a huge move, it's good to understand the bigger picture. So what's actually happened here? Mega nuke, 35.37% or so. Anyone on 3x leverage, which a lot of these guys think is safe, without any kind of stop losses in place, obviously wiped out. So a lot of this selling here is just forced sales. It's not people rushing to their computers trying to sell their bags. It's people just being liquidated. We come to this prior area of interest. The lines in the background here are the meta signal support and resistance indicator. It's a Fibonacci and volume-based indicator, which nails the levels again and again and again. There's a monthly option available now. If you don't have it, highly recommend you pick it up. There's a link in the Discord. I can flip to the 24-hour here to kind of, it's something that I like to do. There's people that say, look, you're trading a 1 hour, trade the 1 hour. I think that's a little bit nearsighted. You're trading a 1 hour after a 35% move. Be aware of the key levels on the daily. So we see that this orange line here from the hourly is also a key level on the daily. It aligns with the meta signals support on a daily, which is going to be even more meaningful, obviously, than the hourly. And it aligns with this prior dip area. Back to the 1 hour. So we can feel pretty confident that this orange level is a key area of interest, right? So prior to the alert, we actually lose it on a 1 hour close. And on a 1 hour close, it's not that meaningful, although that would have been the place where a lot of people went short again and got wrecked again. But breaking this area on a 1 hour, you can see, sometimes it's better to use zones rather than strict lines, right? So it's just coming back into this zone area of interest. No reason to go short there, especially after 35% down from the top. Let's look at the Joule and see what we could have used to actually stay in this trade and end up with 6.43 RR. At the time of the alert, you're looking at basically nearly a perfect Joule signal. So what makes it so good? You have blue and pink and yellow extremely tight together. You have blue rising up versus the prior row. It's turned to light blue, obviously. And although I should say, if you're trading this on this candle close on your chart, it's still going to be white. So if you take the trade immediately, you're front running it, which we find works better in the long run. If you're more conservative, you would wait until this next candle to take the trade. If you traded the alert blindly, would end up in a loss. Whereas if you traded the alert blindly and went for TP1, blindly meaning look, it's still white, but I'm going to take it because the algos say take it. You could have gotten out at TP1. But that TP1 is kind of besides the point, because you have your perfect Joule signal, well, near perfect. What would make it perfect is if the light blue, the fast oscillator, was rolling up like that rather than crossing, but it's still very good. Also, we don't have the DMI support. This line here is red instead of green, but we have the God mode flashing in the background. And we also have this other Joule signal. It wanted to lift up the price, but it didn't. And the algos most likely stood down here because BBWP was completely maxed out. And typically that's not the time you want to go on the low time frame Joule longs. But in the context of this alert, you have this prior Joule formation, long formation. And very often what you'll see is that the first time doesn't really get you the move, and the second time is what gets you the move. When you see this kind of Joule setup after the bull market nuke, it's extremely reliable that it's going to get you a pretty decent move, right? So the only issue here is the stop loss. What you could have done here is simply stayed in the trade as long as the Joule fast oscillator here remains light blue. Stop loss aside, Joule is light blue. I'm not getting out. If you went that route, the moment it turns white, you could get out, and you would have gotten out between TP2 and TP3. a lot better than TP1, right? I'll come back to the exit. But in terms of dodging this up loss close below here, it was really just a matter of saying, I'm not going anywhere as long as this line is light blue. Sometimes it's that simple, right? But in the moment, you can overthink it when this is coming back down against you into the stop loss area. In the moment, it can, emotions can get in the way. But if you can trade with the rule that, no, I'm not going anywhere. This is beautiful. You have, especially once you get a couple bars into this, you have pink and yellow also increasing versus prior row and all pulling up. That's just exactly what you want to see for a low time frame long. Also, keep in mind here, after this big nuke, everyone's going to be looking for the next higher low on the low time frames. So we have the low, then we have what turns out to be the second higher low. On this candle close, you wouldn't have known it. Again, if you're just going by the jewel, you're not bothered, you just stay in it. But if you had waited for, you want to see a higher low, which if you're more conservative, you want to see this higher low, right? So once you see this put in, you haven't entered yet because you don't know, maybe it does this, goes for a double bottom, or maybe it completely nukes, we don't know. So if you're conservative, you wait until you get back up to resistance. You see it fade away. As it's fading away from resistance, the jewel is still telling you, hey, this is a long, right? So at some point here, you're going to be basically placing a bet that you're not going to come back down below this higher low. You're placing a bet that this is the higher low. So you might have entered here or here or here, depends on your style. But once you see 1, 2, resistance gets sold off on very low volume, at some point here, you're going to be entering and you're going to have that confidence because of what the jewel's doing and because you have the higher low. At the same time, RSI, you had one drive here of bullish div on a 1 hour. That's not going to be enough to get you out of a 35% drop. You have the second drive by the time the alert comes. And then very often what you see is the second drive is met with hidden bearish div. So you have the hidden bearish div, which knocks you down into your higher low. And it's followed up by the third drive of regular bullish div. And this is the third drive is usually what it takes to get you out of the mess of the 35% dip. So again, a lot of people would have been waiting for that third drive. And on this candle close, of course, it's just a potential for bullish div. But a lot of people would have been front running it right there. If you're more conservative, you wait for this close above this area here. And you might enter immediately on this point you might enter here with a stop down below here, betting that this is going to hold as the higher low. On PMARP, at the time of the alert, we're just above 50. On these low time frame type 1 and 2 reversal alerts, lower PMARP is better. So this is right on the edge. And this is another place where you could have stayed out until you see the low PMARP again. So the low PMARP, you dip low generally below 50. So you dip back below 50 on this candle close, where you also have the potential for the third drive of regular bullish divergence. On this candle, you have the jewel giving you a hold your long signal. You have PMARP way back below 50, which is good for your long. And you have the potential for the higher low. So maybe if you had waited, you grab an entry here. If you're more conservative, maybe you enter up at the confirmation of the third drive of bullish div. Either way, once you're in the trade, again, it's just a matter of saying I'm not leaving until we get to the color change here up above 80. That's the exiting here is the conservative way to go, because of course it can come back and run against you, right? So if you had exited here, like I said, between TP2 and 3, it's not a bad trade. I think it's around 5 RR. You can see once the jewel turns over like that above 80, yeah, we get one more drive up if you were patient. It took 8 or 9 hours here, and we do get up to the next level. If you're just gone with the TP3 from the alert, you got out just in time, right before the jewel color change here. If you're just trading based on the jewel, you held on to it, hoping for this to go a little bit higher. You wait for it to turn to white, and if you're just a jewel trader, you're out. But in a bull market, a lot of times what you see, it turns, you exit, it rolls down, and in a bull market around this level here, the 60-ish level, you'll see it turn back up, and price normally goes with it, normally gets another shot. So far you see that we went up and tagged the MetaSignals resistance line perfectly, so that could be your TP4, if you want to call it. I also like to look at what's happening on the higher time frames. So if we flip to a 4-hour and look at the Joule signature, there's nothing yet telling you to get out. You have the fast oscillator still light blue and rising, hasn't even hit. Well, it's coming up on the 60-ish level. So this isn't an entry in and of itself right here. It was back on the cross, blue above pink. Let's see what happened if you had entered right there. So if you had entered on this secondary Joule signal where you have blue above pink, but yellow's not cooperating, well, you actually got a perfect entry. So if you're sitting in this trade on the 1 hour, you might flip to the 4 hour and say, hey, I'm still not going anywhere because the Joule's telling me to stay. It can run against you, so taking profit, always a good idea. Nobody knows for sure. There's no guarantee that this is just going to go up to the next obvious level here. Is probably run into some heavy profit taking at 10.22, I would guess, maybe in the wicks, maybe right around 10. A lot of people exit on round numbers. So it depends on you as a trader at this point, if you're going to hold on to it and go for this higher take profit level, or if you're happy with the RR delivered to you already. Back on the 1 hour, if you had held through this based on what the 4 hour is doing, you see now the Joule turning back up in light blue right around 60, and you're going to stay in it further. This is kind of a bull market continuation alert. The real alert is down here, of course. The real move just played out in the context of the 1 hour, but the 4 hour Joule is still strong, and the 1 hour is telling you to hold the long. So you might just stay in this until you see the Joule come up and get into, above 70, 75, 80, and then turn down white, and maybe that's your next exit. Okay, I hope this was helpful, and see you next time.